The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 4th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on a terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a sea of red out there. All the U.S. indices that we track are trading to the downside. Dow's led by a move of 792 points, about 2%, everything about 2%. S&P down 108 points. The NASDAQ 1.5% or 329, 2.5% for the Russell. That's a 52-point move there. The transport's down nearly 3% or 448, 74 points for the semis. You've got gold trading out at $29.15, that's up $14, with silver being down 18 cents at $31.85. Light sweet crude is up $1.16 at $67.21. Natural gas is cruising up 37 cents. That's a 9% move to the upside. Let's see here. How do I want to do this? I'm going to do something slightly different here to assess the markets. We're going to switch to a different page. So, you know how Stevie is at that. I can switch the page, but the question is, do I switch back? Well, we're going to start looking at, just trying to get this set up here. We're going to start looking at, or we're first going to look at the monthly time frame charts for the indices out here. So give me 1 second. We're going to change screens. We'll be over there. We've got the 8 primary indices out here. Screens. So upper left-hand corner, you're going to see the Dow Jones Industrials. Now, on these charts here, the first thing that I want you to focus on is the bottom portion, the cadence of the market, the dance steps of the market, where we are tracking consecutive moves higher, consecutive moves lower. So I'm going to have you focus there, and I'm also going to have you focus when you take a look at the top portion of the chart, price in relationship to the oscillator and change line. Now, granted, it is March 4th. The month ends at the end of the month. I'm not sure what the last trading day is. I'd say March 31st, but that could be a weekend. So the last trading day of March, the end of March, is when this is going to matter. However, price is trading below that green oscillator and change line. And they close below that. Well, we can see that we haven't been below the oscillator and change line since August of 2023. And that led to a 3-month correction to the downside, a 3-month move to the downside. We can see that now, even though, so last month was a move lower. We're basically up at the highs out there, but it was a slightly lower close out there. No big deal. That oscillator and change line held. But if we stay below that, odds favor we get a 2 to 3 month retracement out there. Again, kind of hard to make the call on March the 4th out here, but it is important, I think, that's why I want to share this with you, to take a look at. This is really all about patterns. It's about visually looking at the charts, understanding the patterns that are present, and this is one of the patterns on that monthly time frame. The S&P 500 doing the same, had a lower close last month, but basically, and we made at the same time making a new all-time high. We didn't really close that much off the highs out there. We're still not really that much off of the highs, but we did have that 1 month to the downside, and we're trading below that oscillator and change line. So guess what? Maybe we're going to have a 2 to 3 month pullback. The same thing for the NDX 100. The Russell 2000 has got that same pattern out there. The same for the semis, the transports, the XAU. It's that does not have that pattern, at least not at this point in time. That's had a 2 month move to the upside, and the New York Stock Exchange, same pattern there. So that's on the monthly time frame charts, and so granted. It is only March the 4th, but right now they're saying caution, Will Robinson. Not that my name's Will Robinson. I wish it were right now because I could get this computer to work a bit faster for me. All right, so we're closing that out. So that was the first thing. Where's the next thing that we want to go? Let's go take a look at, and I apologize for the time that this is taking here. I may try a different process come tomorrow. Wow, I've never seen it operate this slow. It's actually kind of crazy out here. I mean, you're seeing a blank screen, and all that was doing was closing something down. So, here, I'm going to tell you a story about the indices out there. If we'll go take a look at the cash indices, the daily cash indices next when they populate, or we can take a look at the equity future contracts. If we were looking at the equity future contracts, the ES, the NQ, and the Russell 2000, good thing I can narrate without looking at the charts, is that you're going to see, so let's go actually show you. Let's stick with this. This shouldn't take that much time. Which is the daily equity future. So 3 of the 4 have got TD9 count bottom pattern signals, the ES and the NQ, and I'll get there as soon as my system allows me to do this. Maybe I'll shut this thing down during the show. That would be a dangerous thing. Give me a second, if you will. So here, what you're going to see on the ES Mini, left-hand side, you're in bar number 8 of a TD9 count. Same thing for the NQ. Now, what we know is that when you get to a valid TD9 count, in this case here, the low, that the odds favor, you got a 90% probability this is going to go ahead and complete a TD9 count bottom pattern. Now, tomorrow is going to be the important day. All that needs to happen tomorrow is price has to close below the close of bar number 5. In the case of the ES Mini, that close tomorrow means a close below 58.73. In the case of the NQ, the close tomorrow would need to be a close below 25.8325. Now, the Dow Equity Future contract is negating, at this moment in time, is negating us by the D point pattern that was established by this bull separation line. Price is also trading below its TD9 count breakout level at 42,752. Now, if it closes the day back above that level, getting back to a breakout area can be where a bottom would form. But really what the Dow might need is another bullish reversal candle to confirm its bottom signal. Now, the Dow is actually also testing and so far is rejecting the swing point, the high of the swing point from January 13th. So in the Dow Equity Future contract, 42,565 is the number to look at. In the case of the Russell 2000, she is going to go ahead and complete a TD9 count bottom pattern today. Or confirm a bottom pattern today. Complete that pattern tomorrow. We can still get a lower low out there. So at least 3 of these 4 equity future contracts, maybe even the Dow, just simply by a test and rejection of that swing point, are saying caution. There could be a bottom, the type of bottom or bounce that at least last 2 to 4 sessions out there. So that's what's going on. We take a look at the daily equity future contract. If we go take a look at the daily cash indices out here, let's get those charts up on our screen. Here you can see, again, in case of the Dow, the cash indice trading below its breakout level, maybe targeting its swing point from January 13th. It has not made it to the high of that swing point, not yet. In the case of the S&P 500, bar number 8. The NDX 100, bar number 8. Russell 2000, bar number 9. TD9 count confirms today. Composite, bar number 8 out there, and the same for the semis, bar number 8. We are getting close to TD9 count bottom patterns. We may see some type of decent bounce. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's go take a peek at some requests that have come in. Let's do that. Let's take a look at the first request, which was to take a look at XBI. This is for Dan inside the Tiger's Den. He's waiting for the $83 area. On a daily time frame, you're in bar number 7 of a TD9 count. You have a Rhodes momentum indicator signal that is present. And what that says is that if we see a bullish reversal candle, that'll identify a Rhodes momentum indicator bottom. That would then lead. Oh, charts. Oh, I'm probably on that. Thank you, Mr. Bill. You know, I told you that I could screw it up. I absolutely told you I could screw it up. Darn, wish I had been wrong about that. But here we go. That means you didn't see those other charts, which I already closed down. Okay, let's take a look at XBI. So an XBI on the left-hand side, thanks, Dan, appreciate that. You can see you're in bar number 7. We can see a Rhodes momentum indicator signal that is present. That needs a bullish reversal candle to confirm a bottom. That would then lead or should lead to a rally towards its oscillator and change line, which has been acting as resistance. The current print on that is 87.98. If you look at a weekly time frame chart, maybe forming a new A to B equals CD pattern to the downside. The B point of it, Dan, is the week of January 17th. 53 million shares that traded hands. So far for this week, we're at 15 million shares. So kind of watch for that. Price is also trading into a swing point here. It's a swing point from April 26th of 2024. Phew, I can get that. 57 million shares traded then. Again, so far, we're just a day and a couple hours. We're at 15 million shares. So watch that close. If price closes inside that swing point would be 86.31. That may be signaling to move down to the 81.14 level. Certainly get you in towards the 83s out there. This is really weird. Why is my chart showing Nike 77.06? Yeah, I tell you, man, I've got some weird things going on. Here we go. Here's the XBI. Ooh, really strange. Okay, so now I take a look at the XBI. I wonder if the system is running duplicates somewhere. Okay, so in the case of the XBI, sorry for asking myself a question there, talking to myself. The profile support out here is 83.66. So the next level of support is at 83.66 out there. Weekly, boy, not looking so great. But the daily, maybe it goes on to form a TD9 count or Rhodes Momentum Indicator bottom paddle. So that's what I'm looking for. Obviously, you're still going to continue to wait. Keep your eye on that daily time frame chart. GTE writes in and would like to take a look at ticker symbol XPEV. We took a look at this and identified the TD9 count top. We did that last week. That is most certainly held. Price right now is trading below its oscillator and change line. That suggests that this has lost momentum, and price might be targeting its profile support area, and that's going to be in the range of $17.99 to $18.52. That's coming from the daily time frame chart. The weekly time frame chart remains bullish unless a bearish reversal candle were to form out there. Even stranger. How can the week? Wow. Okay. I'm seeing the oddest things in my charting system. Jeez. So XPEV remains bullish. Support would be at about the $17 area. The monthly chart is showing a consolidation pattern, quite frankly. Price has gotten back to a swing point from back in July of 2023. That sets up the upper portion, if you will, of the consolidation, the bottom portion back down at the lows that we traded at for quite some time back in the April 2024, August through August of 2024 timeframe out there. So expect or anticipate price to continue to move lower, maybe finding support between $17.99 and $18.52. If it closed below $17.99, $16.33 is the number to the downside. We're going to go take a look at Nike out here, which is so weird because that was showing up on some of my other charts. No idea why. We take a look at Nike. We got the daily time frame that right now is trading inside its profile. Nike top with a TD9 count top. Price is trading into the center of its profile, so this is a potential support level. That support level being 76.88. If price closes below that, you're likely to see a move to 75.29, the bottom of its profile. On a weekly time frame has a Rhodes Momentum Indicator bottom signal. With price trading with inside its profile, it did find resistance at the 80.09 level. That's the top of its profile. That is most certainly a key level of resistance to recall or remember, I should say, on any rallies. And on a monthly time frame, what we have out here is price consolidating with inside its daily profile. Dan, that's between the range of 70.82 and 84.02 out there. So TD9 count top. If the center of the profile doesn't hold, 75.29 would be a likely downside target out there. The next request coming in from YOY inside the Tiger's Den. And his curiosity is about wheat. I've thrown up the December wheat contract out here. What you'll see here with regard to wheat is that today is going to become bar number 8 of a TD9 count. What that means is that you could get a bottom between today and Thursday. If you look at the bottom that formed in wheat, the last bottom out here was a TD9 count. That was back on December 20th, the week of December 20th, 2024 out there. Price is testing that level out here. So if you were to see a close below that low, 578.75, that would be a signal that we're likely to head to lower price. It depends what's going on with the TD9 count pattern on the daily time frame, though. So what the daily time frame chart is signaling to us is that wheat is going to try to form some type of bottom between today and Thursday out there. So I hope that helps you out with wheat, YOY. Bob in Spokane wants to take a look at Palantir. PLTR is the ticker symbol. Palantir is going to complete a TD9 count bottom pattern today, and it's doing that right at breakout support. This is really a nice, ideal pattern, at least for a bottom. Is it a guarantee? No, but it sure is a nice. It sure is a nice way to form a bottom. Get back to breakout support, form a TD9 count, and then rally. Now there's a new profile that is formed out here, the bottom of which is at 81.63, and we're trading below that as we speak right now. 81.63 is the bottom of its new profile, and the it's a bearish structured profile, Bob, and that's between the range. The sell zone is between 90.78 and 93.83. The weekly time frame chart for Palantir has a TD9 has a Rhodes Momentum Indicator top, and price right now is testing support. Support being is testing the center of its profile at $82 even Steven. A close below that or continue move below that says that 69.60 would be in play out there. So is 69.60 in play? Only if we see a close below 78.47. On a monthly chart out here, it's too early to call. Well, no, it's not too early to call. It's got to sell the D-point pattern. Big old shooting star that formed last month out there. But my focus, I would say our focus, your focus, should really be on Palantir. And it should really be on, let me see what the exact low was of that bar, TD9 count bar, 78.58. I would still say a close below 78.47 is the signal that Palantir wants to continue to move lower, and that next area or price target would be about 69.60 out there. But the daily suggests you ought to get a rally. That rally ought to take us to the 90.78 level to 93.83 out there. So I hope that helps you with regard to Palantir. How about that? I got through all the requests I was able to punch into the screen. Let's just simply take a look and see what's going on intraday. Here's the NQ charts. The NQ charts for a 10-minute chart of a Rhodes Momentum Indicator bottom. The same thing is true for the 15-minute. The same thing is true for the 30-minute. You've got a TD9 count bottom that's going to complete at 12 noon for the 60-minute time frame chart. So that bottom row of charts, the intraday charts for the NQ, what's their signal? Their signal is to expect or anticipate some kind of rally. Maybe it only gets you to 2,300 out there. Maybe it's 2,400 out there. If you look at the top row of charts, you've got a 240-minute bar number 8 that has it's present at this time. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We've got the charts up here for the New York Stock Exchange. In this case, we're really looking at the advanced decline oscillator. That is the bottom panel. That's a difference between the 19 and 39 period exponential moving average of the advanced decline line. When it gets down to the minus 150 level, it enters oversold territory. We're currently printed minus 163.37. Now, it doesn't really matter where it's printed at 11:31. It matters where it's printed at 4 p.m. out there. But if it does close below minus 150, you're in official oversold territory. Can it get more oversold? It most certainly can. Now, here's the interesting pattern to go along with the New York Stock Exchange, which basically is the general market, if you will, is that the Spot VIX index, which has nothing to do with New York Stock Exchange, Spot VIX index is going to form bar number 9 of a TD9 count pattern today. Now, that pattern will complete tomorrow. That's as if the VIX should go ahead and form a top, just using that same tool that we always use. Now, the last time that there was a TD9 count, a valid TD9 count top, I should say, because you see another one, but it's not valid. Let me just get my cursor out here. So here, when I say here, I'm referring to the trading days of October 31st, November 1st, November 4th. You'll see a TD9 count pattern that formed, but the high needs to be on bar number 8, 9, or the bar following 9. That was not the case, not a valid count. Where there is a valid count is bar number 8 out here on October the 8th. And that most certainly led to a high inside for the Spot VIX index. Now, these patterns can fail. As an example, back in July 18th, of 2024. That was bar number 9 that completed. I'm sorry, that was the bar following. That was the bar following bar number 9. And that was negated the very next day, and that clearly led to a major spike high, as you may recall. You can certainly see it on the charts out there. So the VIX is giving us a signal. It could or should form a top today or tomorrow. Price should pull back. Where should price pull back to? Well, I would say it would pull back to 1754 or so. That's the 50-day exponential moving average. And if, in fact, that unfolds, then you're going to see a rally. So the Spot VIX setting up with a TD9 count pattern out there. What else did we want to take? Oh, we were looking at currencies. Let's go take a look at what's going on in the currency market out here. And we take a look at currencies. We're looking at the euro. The euro's had a nice little rally, and it's run into potential resistance, both at its breakdown level, TD9 count breakdown level, that is, at 1.0539, which also has a TD9 count top. So price is testing 2 levels of resistance out there. In the case of the Japanese yen, it's moving lower. It's triggered wave number 7. That's letter G on my screen. That needs a higher low to confirm that pattern. It looks like at this stage here, it may in fact negate a buy the D point pattern today. Price is trading below its breakout level as the as the yen is moving lower on this chart. It's getting stronger. The U.S. dollar is getting weaker, whereas the euro is moving higher. That's getting stronger. The dollar was getting weaker. If we take a Great British Pound, it still has a... No, it negated its TD9 count topping pattern. Where it's going to go target should be its TD9 count breakdown level at 1.2788. What the Great British Pound needs is a new bearish reversal candle to confirm a sell the D point top. If we take a look at Bitcoin, this is the March contract. It's just consolidating with inside its profile. 88.53 is support. Resistance at 91.740 out there. A close below support at 88.53 ought to take price to the 78 to 80 level. So that's what's going on in currencies. That's what's going on in Bitcoin. Let's go back to the request line. The request line was JP Morgan. JP Morgan possibly forming an A to B equals CD pattern to the downside today. The swing point that we're looking at was from February 25th. 9.6 million shares traded that day. Today we're at 5.5. So you've got a confirmed A to B equals CD pattern to the downside. I'm just simply going to put in the A to B line out here, and I'm just simply going to move that over to the C point to give you a price projection, which gets us right back to its breakout level at 239. So JP Morgan is on its way to 239. What happens if it breaks through that level? Good question. Let's come back when that unfolds out there. But that's what's going on with JP Morgan. What's going on? We take a look at BAC out here. Is that it? There we go. Well, looks like a potential A to B equals CD pattern to the downside also forming out here. So the B point has a swing volume of 38 million shares. That was a day of 225. Today so far, oops. Sorry about that. Today so far, volume is 30 million shares. So we already have the volume, in essence, to really take out that swing point and confirm an A to B equals CD pattern to the downside. So financials, we'll go take a look at the XLF. That was also requested as well by Visual. So we'll take a look at that. But here, if we take a look at the A to B equals CD pattern, BAC, it's attained the 1-to-1 level. It's a strong move, so it suggests more than a 1-to-1 level to the downside out there. But what you're watching for here is any kind of bullish reversal candle that would confirm a buy the D point pattern. Weekly chart price is trading below profile support. Its target area is 38.73. The monthly time frame chart price is trading below its oscillator and change line. Its target is 40.81 out there. That's what's going on with BAC. LB writes in and would like to take. We'll get to XLF, but right now we're going to take a look at LB. We're going to take a look at SMR for LB. Don't worry, I'll get it figured out. In the case of SMR had a TD9 count bottom pattern. It was negated yesterday. That suggests lower price. Lower price to where? Well, first, price has got to close below where we're sitting right now, because where we're sitting right now is the monthly oscillator and change line. It's printing at 1570. We're printing its price is 1564. So price at a key level of support. The next level of profile support would be a close below this green oscillator and change line on a monthly time frame. That would take us back to the 918 to 1175 area. That is the buy zone on the monthly time frame. The weekly area, next level of support, would be at 702. And on the daily time frame, if I just squish this just a tad, what do I see out here? I don't see much. So, well, I see A to B equals CD pattern to the downside. So a bullish reversal candle on a daily time frame would confirm a buy the D point. LB, you also wanted to take a look at URA. You're looking for entry points in all these. Well, in the case of URA, it negated a TD9 count bottom pattern yesterday. That says lower price. The weekly time frame says don't close below 2342, which is a breakout level. If you do, you're likely to get back to the 1990 level. 1990 is the monthly TD9 count breakout. So we're trading below profile support across the board for all three time frame charts out there. Lee, you do have wave number 7 signal, and it's a valid one, so that just needs a higher low to confirm a daily bottom. That's what's going on with URA. Let's go take a look at the XLF out here for InnoVisual. Is the XLF forming A to B equals CD pattern downside? It is not. What the XLF has is a Rhodes momentum indicator top, and that confirmed yesterday. Price is trading below its bullish structured profile. That means below 51.05. The XLF likely to go target its breakout level of support. That's at $49.01 out there. And below that, you've got support at about $48.68. That's the monthly oscillator unchanged line. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we are through all of the requests out there. If you're inside the Tiger's Den, feel free to go ahead and post something. Happy to go take a look at that for you. But I'd be remiss if I didn't take a look at NVIDIA. So let's go take a look at NVIDIA, which on a daily time frame, guess what it's forming today? Bar number 8 of a TD9 count. So much like we took a look at in the equity futures out there, you've got a TD9 count pattern that's likely to form between today and Thursday. That's on the daily time frame chart. The weekly time frame chart prices back into its buy zone for NVIDIA. The buy zone is between 104.33 and 117.97. With inside that buy zone is its breakout level, which is also being tested right now, and that's at 114.86. Remember, this is a weekly time frame chart. NVIDIA on a monthly time frame has made its way back after forming a Rhodes Momentum Indicator top. A TD9 count top has now made its way back basically to support. And that's the bottom of its profile, 109.42. The actual low that we've seen for the month so far, which basically is today, is a 110.11. 110.11 versus the profile support at 109.42. So it does look like NVIDIA is at least getting ready to form some type of bottom, some type of counter trend move, something that ought to take it up towards its oscillator and change line. That would be at the 124.53 level out there. Let's take a look at, let's go back and now spend a little bit of time with the equity future. Oops, that wasn't it. Not that we can't spend time there, but let's go. The intention was to take a look at the equity futures. So let's come back here and take a look at the NQ. So it's 11:43, and here's what we know right now. We know that a 10-minute TD9 count bottom pattern is present, and price is taken on its first level of resistance. That is its oscillator and change line. That is at the price point of really where we're trading right now, but let me give you the exact number, is at 2244.68. If we close above that, that's going to be a signal that we should get to higher price. Let's look at the next chart. It's the 15-minute time frame chart. It has a Rhodes Momentum Indicator bottom signal. Its level of resistance is at 2288. That's another number to put down on your pad of paper. We look at the 30-minute time frame chart. The 30-minute time frame chart has a Rhodes Momentum Indicator bottom pattern. Price is going to go target resistance. Now, that was a bullish structured 30-minute profile that price has been below for more than 2 consecutive sessions. What does that tell us? That says if on a rally, it is only a counter trend move, price will find resistance between 22.85 and 23.31. That also tells us if we close above 23.31 on a 30-minute basis, price ought to make its way to 2400.75, and above that, we move higher. On a 60-minute time frame, you have a TD9 count bottom that is completing in 15 minutes. Price ought to rally to its oscillator and change line. That's at 23.14. Above that, you could make a move up to the 25.68. That's in lieu of any kind of new profiles that might form between now and then. If we look at the 120-minute time frame chart, 120-minute time frame chart has a wave 7G signal out there. That needs a higher low to confirm that pattern out there. It also has a Rhodes Momentum Indicator signal that has been triggered. But in order to form a bullish reversal candle, well, actually, it could do that here in the next 15 minutes. This candle is going to close at 12 noon. At the moment, it looks like a hammer candle, but I don't know what it's going to look like 14 minutes from now. But if it is, then you got a bottom pattern there as well. The 240-minute time frame chart is in bar number 8 of a TD9 count. It also has a Rhodes Momentum Indicator signal, but it's not till 2 p.m. that its candle would form. But watch that 240-minute time frame chart. Certainly going to watch these other intraday charts out here. They're all signaling that we should rally a bit. And the NQ, it's got a TD9 count bottom. Would I expect the markets, if the TD9 counts are going to form bottoms out there, I wouldn't expect any kind of significant rally today or tomorrow. Why is that? Because in order for that pattern to form, price must close below the close of bar number 5, and in the case of the NQ, that's at 21,386 out there. We're 22.55. It's not that big of a, we could do that in a heartbeat. Now, maybe that's not the pattern that forms out there, but those are the patterns that are present. So that's what's going on. We take a look at the NQ. No idea how long it's going to take to populate this chart here. I'm hoping not too long, although I did forget to shut a few things down. But let's go take a look at the ES Mini. What we're looking for out here is any forms of synergy. Well, we have the synergy on the daily time frame. That's that TD9 count pattern. So that it has in common. But how about the other charts? The ES Mini for its 10-minute time frame has a Rhodes Momentum Indicator bottom pattern. Price is trading inside a bullish structured profile. A 10-minute close above the center of that profile. I'll give you that moment number here, 57.71. A close above 57.71 is going to suggest a move to 58.24. And above that, you'll be looking at 58.55. On a 15-minute time frame, you've got a TD9 count bottom pattern. Its levels of resistance are 57.90 and 58.24. On a 30-minute time frame chart out there, I have to assume there's an A to B equals CD to the downside pattern. Let's open up the chart. There most certainly is. In fact, let's go ahead and paint that pattern in here. Here's our A to B, but it sure does. Did it really complete that pattern? No, it didn't look like it did. So I don't have that pattern. Oh, I've got wave number 7 once we open up that chart out here. So that, nope, I don't even have that. I don't have that. I do not have any kind of bottoming signal for the ES Mini for a 30-minute time frame. But the 60-minute says, hey, raising my hand, I'll fill in. It's got a TD9 count bottom, just like the NQ, that's going to go ahead and complete in another 12 minutes. That should take us up towards 58.11. Notice on the 60-minute ES Mini chart, the oscillator and change line, that has acted as stiff resistance on any kind of rally out there. So that says that's an important level to watch. That right now is at 58.10. Give it a few bucks. Maybe it's 58.12 on a rally or so. And if you close above that, 58.79 is in the cards. 120-minute time frame chart, no bottom signal there. TD9 count, Rhodes Momentum Indicator signal on the 4-hour and on the 3-hour time frame chart. Let's go take a look at the Russell 2000. We oftentimes leave that up. That's my fault. We're not leaving it off right now. The Russell 2000 is the one that has the TD9 count bottom pattern that's going to go ahead and complete today, if I'm not mistaken. Maybe today's bar number 9. It could be mistaken. Yeah, today is bar number 9. It's going to complete that pattern tomorrow. But This has been the weekend to see out here. So it's important to watch that weekend to see what it's doing. It's 10-minute time frame. A Rhodes momentum indicator bottom. Price dealing with resistance right now at the top of its profile, which happens to be, looks like we're trading just above it, which happens to be at 2062.60. Close above that suggests a further rally. Rhodes momentum TD9 count bottom on the 15-minute time frame chart. Price is already traded above profile resistance out here. That was at 2060. It's 2066. A close above that, you head up towards 2085. TD9 count bottom on the 30-minute time frame chart. That suggests as long as price can remain above its oscillator and change line, 2100.40. TD9 count on the Russell 2000 for the 60-minute time frame. 2076 as its price target, and a move above that, you could get to 2112. TD9 count bottom pattern could form on the 4-hour chart by the end of the day. Well, let's not leave out the Dow equity future contract. Let's go see what she is doing, see if these charts here can populate before we go to the break out here. Well, we've got another segment, so we can always come back to that. Let's see if we get this thing to populate. And that's the Dow equity future contract. The Dow is, at this stage here, negating its by the D-point pattern for its daily time frame. But now we take a look at the play-by-play. A 10-minute Rhodes momentum indicator bottom. You've got a resistance zone in the Dow between 42,695 and 42,761. TD9 count bottom on the 15-minute time frame chart. Its resistance points are either 42,612 or 42,730. TD9 count bottom could form in the Dow between 12 noon, and that's bar number 8, and 2 p.m. out there. So the Dow a little bit weaker on its intraday bottom signals. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back up, folks. David H. in Panama City. Boy, if you haven't been to Panama City, you're missing some of the best beaches on the planet. Of course, Clearwater Beach, not bad. Delray Beach, we've got a really nice beach here, but nowhere near as nice as Clearwater or the Panama City beaches out there. But David writes in, he wants to take a look at MSTR. He's got some puts, I believe, that are about to expire March the 7th. He's got the 250 puts. Where do you see the low being for this week? Well, on a longer-term time frame, this is a confirmed A to B equals CD pattern to downside. Should take you to the 147 type area. So maybe that's for your next trade out there. But right now, price is trading inside a bullish structure daily profile. The bottom of that profile, which has been tested so far, this formed yesterday. The buy zone is between 241.63 and 251.34 out there. A close above 251.34 suggests that price should rally to 270.76 or 280.46 out there. If you look at the monthly time frame chart, price has found support at its oscillator and change line, and that's at the level of 247.39. So you got support both daily and monthly. The weekly support is down at 221.53. I think based upon what we're looking at on the daily time frame, it's probably not worth the risk out here, knowing that you've got that bullish structured profile out there. So what could be the low? Well, the next level of support would be where I would tell you, but we have things that suggest that maybe we're not going to get there, and that would be at 221.53 out there. So, David, thanks for taking the time to write in, and I hope that information helps you. So we got about 15 seconds left. Let's just take a quick peek. I would say it would be the NQ that would lift the boats higher if we're going to get any kind of a rally out here. Again, the bottom portion of our charts, our intraday time periods, all suggest that we should see some kind of counter trend move. But is that the bottom? Don't know. What I do know is we may get TD9 count bottoms in the NQ, the ES, certainly the Russell 2000 over the next couple of days. We are basically in the oversold territory. We take the New York Stock Exchange Advanced Client Oscillator. Folks, there is a bounce that is coming. There is no question about it. Take care, and we'll see you tomorrow.